Hi, hello everyone. I'm John Matteson, the VP of Marketing at FFR Trading. And today I'm excited to be speaking with Ian Cooper, the mastermind behind the Quick Moves Trade Alert program. Ian is a seasoned trader with decades of experience, and his Quick Moves Trade Alerts are designed to help traders capitalize on short-term market opportunities with extreme accuracy. So Ian, thanks for joining us today.
Thanks for having me.
So I wanted to ask you, you've got a number of programs. What inspired you to create the Quick Moves Trade Alert program?
Well, the Quick Move Trade Alert program is a bit faster paced than the other programs, such as, the News Events Trader, Trade Alert 365, things like that. This one, it moves a little faster using, unique indicators, RSI, MACD, Williams percentage range, the Bollinger Bands at 220, full stochastics, things like that. And when they all align in either overbought or oversold territory, that's where your opportunity comes into play to make a very quick move. And typically what we'll do is we'll either trade monthly options using basic puts or calls, or we'll use weeklies depending on the setup that we have our eye on.
And so if somebody was going to be a subscriber of Quick Moves, can you just kind of walk us through how the Quick Moves Trade Alerts work, what they receive and so on?
Sure. Well, as soon as you sign up, you do receive our welcome letter, and you do receive our ebook describing how the system works, some of the technical indicators that we do use, and how we're going to spot trades along the way. And then, several times a week, we try to do several times a week, depending on if the market's behaving or it's starting to pivot lower. We'll try to issue, between 3 and 5 new trades every week, again, depending on what the setups are that we are coming across in this, these days, a bit more of a volatile market.
All right, excellent. And, it sounds like a pretty powerful tool, so I'm sure the listeners are curious and the viewers are curious, what kind of results traders have seen with the Quick Moves Trade Alerts. So I will show on the screen here in just a moment the since inception returns. But do you have some examples of some trade alerts that went out recently that you can show us?
Actually, I can pull up. We recently played NVIDIA, which had some recent issues of pullbacks, and then it ran up too high too fast. And then on the pullbacks, it pulled back too much too fast, and we were able to capture some really impressive wins using NVIDIA calls and puts just over the last few weeks. It's turned out nicely. We also traded AMD as well, the advanced micro devices.
All right, before I switch over to you, Ian, I put up the Quick Move Trade Alerts. This is since inception, the performance record. This is based on a $10,000 account size, which I believe that's probably the minimum that you recommend, and you're allocating approximately $1,200 per trade. So this start date was January of 2018, and the results go all the way through July 15th of 2024. And you can see, obviously, the net profit is on a $10,000 account over that period, you're looking at $225,000. That's a return on capital of 2,258%. Now, a lot of people like to look at the win percentage, which is very high at 77%. But I think the more impressive thing is the average win size of $1,052 and the average loser just $387. So that's, I think, even more impressive. And a monthly return, you're returning about 29% per month on average during that period, which equates to, on a $10,000 account size, about a little over $2,800, almost $2,900. So pretty impressive. Now, as of late, the returns it's like it's been on steroids, hasn't it?
Right. We've had some great success with Quick Moves, and we've just been having a lot of fun. We'll only pull the trigger if we're, there's no way to have 100% certainty in this market, but we like to have things line up, and then we'll just wait for the trade to come to us after we issue it.
All right, awesome. So I'll hand over to you so we can see your charts and you can kind of walk them through some of the recent trade setups here.
Well, we can start. Yeah, let's go ahead and start with this one. This is a chart of the Dow Jones Industrial Average just to show how we can easily spot some opportunities. We'll use RSI, MACD, Williams, percentage range, and the full stochastics, which are all on your screen right now. Now, about 80% of the time, when these particular indicators align in overbought or oversold territory, that will tell you when the pivot will typically happen in the stock, in the index, in the ETF, because what these indicators are telling us is where excessive fear and excessive greed are coming into play. Now, for example, if we start at the top with RSI, when RSI gets to or below its 30 line, RSI is considered oversold. MACD, now when MACD pulls back too far, too much from the mean being the line around here, we have confirmation of what RSI is telling us around its 30 line. Never wanting to rely on just one or two indicators, we expanded a bit more to use Williams percentage range. Now, when Williams percentage range drops to or below its 80 line, we have further confirmation of an oversold condition. But not wanting to stop there, we add in full stochastics. And you can see that when full stochastics dives below its 20 line, again, we have another confirmation of an excessively oversold condition. So when you look at this from early September, for example, RSI dipped below 30. MACD came back down too much too soon. Williams was below its 80 line. Full stochastics was well below its 20 line. And at the same time, the Dow Jones was just starting to bottom out here. So if you bought a DIA call, you did very well as the Dow Jones Industrial Average ran from about 33 to just above 34,000. So a DIA call would have done very well. Again, we had the same setup again here over extensions on all four of those indicators. This time it led to a much bigger return if you played a DIA call. Now, sometimes when you have a, let's call this a cluster up here, you kind of want to wait just to see what is going to happen. Even though you have overextensions on everything, this one kind of lasted a bit longer than we were expecting at the top, finally sort of giving way over here. So if you ever see a cluster like this, you really have to wait for everything to line up perfectly to really make a good solid call that you may have a pivot in place. For example, over here, the RSI was at its 70 line, became excessively overbought up here. The Dow Jones became excessively overbought at triple top resistance dating back to March. MACD popped too much too soon here. Williams percentage range was just starting to break below its 20 line. And also at the same time, you can see here with full stochastics just starting to break below its 80 line. So on the short side, when all those aligned in overbought territory, it wasn't a big surprise to see the DIA pull back here. So if you bought a DIA put here, you had the chance to do very, very well. Again, over here as well, ran up too much too soon. And we're beginning to very slowly see the Dow Jones pivot lower here too today because it's running into triple top resistance here. And you also have a slight overextension on RSI, slight overextension on MACD, and then you have a massive overextension on Williams percentage range and full stochastics, which tells us, hey, we may want to buy a put option at this point for a potentially quick return, with it potentially refilling its bullish gap around 40,000, where it gapped up from earlier this month. And what's nice is that we have these similar same setups with pretty much every stock and every ETF out there. You can see here, for example, with NVIDIA, the same setups on the bottom and the tops called pivots nearly perfectly. Again, these indicators will not lead to 100% success. Anyone that tells you they have perfect success, it's not true. No one is perfect in any market. But these indicators alone will help give you a good leg up in the market in spotting opportunities that are either down too much or up too much.
And for the purposes of the quick moves, are you basing the signals or the calls off of a daily chart, or do you use a range of charts? How does that work?
We'll use a range of charts. We'll use a monthly chart. We'll go out to, let's say, 1 year to 2 year, just to get a full picture view of what's going on. Oftentimes, I like to look at a 1 to 2 year chart just to get a bigger picture view of what's going on. And typically, that's led to the successes that we've seen in the chart that you had up just a moment ago. With NVIDIA, for example, we recently were able to, we didn't catch the exact bottom here at 90 a share. We kind of had to wait for everything to align and pivot higher. And we were able to get in when NVIDIA was trading around $100 a share, and we were able to capture a big move as it ran substantially higher here. Unfortunately, again now, as we just saw with the Dow Jones Industrials, NVIDIA is starting to run into overhead resistance, double top here, just above 125, and could pivot lower, in the near term. So we could also buy a NVIDIA put option here to potentially capture some downside moves here based on what the technical pivot points are telling us.
All right, perfect. So, I know when it comes to trading, most people just kind of look at the rewards and they don't think about the risk side of it. But I know you do. You've been doing this for a long time. Risk management, obviously a key part of your alerts. Can you talk maybe a little bit more about how you manage risk with quick moves?
Typically, we'll use a stop loss of, let's say, around 35%. However, and we'll always issue an alert to get out of a position if it goes against us. Sometimes we'll go out a bit further and take on a bit more risk if we see a particular stock pivoting or is about to pivot on specific news moving forward. But we'll always alert and tell you exactly when to get out of a position. We're not stretch the imagination, but we'll do our very best to, get you in and out of a trade with, hopefully a good rate of returns and success. But we're also mindful of the money that's being put on a position. So we'll always, we're very good at keeping an eye on what the underlying stock is doing.
All right. And for those who are interested, how can they get started with Quick Moves Trade Alerts?
The best way to get started is to contact FFR immediately. We'd love to have you on board, making some good money with us.
All right, Ian, it's been a pleasure talking with you today and learning more about the Quick Moves Trade Alerts program. For those of you listening or viewing here, if you're looking to take your trading to the next level with a proven, actionable strategy, I highly recommend giving the Quick Moves Trade Alerts a try. You can reach out to us here, like Ian said, at FFR Trading. That's 800-883-0524 to get started. All right, Ian, thanks again, and we look forward to doing a more in-depth interview with you here in the future.
Thanks so much.